Welcome back. Today we're diving into the 10, specifically the big real estate story of 2025. And if I had to summarize the entire housing market in one word, it would be stuck.
Stuck? Like traffic jam stuck?
Exactly. While the rest of the economy was dealing with AI, tariffs, and all that chaos, housing just kind of froze. It wasn't crashing, but it definitely wasn't booming.
So stuck in neutral. That sounds frustrating for everyone involved.
Frustrating is right. Existing home sales are barely scraping by at around 4.1 million. That is historically low, like some of the lowest numbers in 30 years.
Wow, that is quiet. What about rates? Did they ever come down?
Not really. They spent most of the end of the year bouncing between 6.2% and 6.4%. Better than the 7% spike earlier in 2025, but still high enough to keep things chilly.
So why is it stuck? Is it just the rates?
It boils down to two things, affordability and mobility. Lisa Sturdivant from Bright MLS put it perfectly. The fundamentals are strong, but affordability is a mess.
Right, because even though price growth slowed down, prices are still sky high from that pandemic surge.
Exactly. Even in a buyer-friendly market, the math just doesn't work for a lot of people.
You mentioned mobility as the second factor. What's the deal there?
Well, think about why people move. Usually it's for a new job, right? But 2025 was a low hire, low fire year.
Ah, I see. If you aren't changing gigs, you probably aren't changing digs.
Precisely. If your job is stable and you're not relocating, you just stay put.
And then there's the biggest anchor of them all, the lock-in effect.
Oh, the golden handcuffs. Let me guess, people sitting on those sweet 3% rates.
You got it. Redfin data shows more than half of mortgage holders are locked in below 4%.
Yeah, trading a 3% rate for a 6.5% rate is a hard pill to swallow. Your monthly payment would skyrocket.
Exactly. Odeta Kushi from First American pointed out that there's zero financial incentive to sell right now. So sales volume is down to 75% of what we saw in 2020.
So sellers are just hunkering down?
That's the phrase economists are using. Instead of dropping prices to meet demand, sellers are just waiting out the storm. Some reports say this could drag on through 2027.
Is there any good news, or are we just frozen forever?
There is a little thaw happening. Mike Simonson from Compass noted that about 20% of mortgages now have rates above 6%.
Oh, interesting. So those people aren't locked in.
Right. If you're already paying 6%, moving to another 6% loan isn't scary. They're free to move when life happens.
But here's the twist. It's a K-shaped market.
Meaning the rich get richer?
Pretty much. The luxury market actually saw sales and prices go up. If you have money, the market is moving fine. It's everyone else who is struggling.
A tale of two cities, or two tax brackets.
What about the sellers who have to move but can't get the price they want? Are they taking a loss?
A lot of them are getting creative. Instead of lowering their asking price, they're pulling the listing and renting the place out.
The accidental landlord strategy.
Yep, thousands of sellers took their homes off the market in late 2025 rather than sell cheap.
So, what's the verdict for the future? Are we doomed?
Hopefully not. Most economists think 2026 will bring a reset.
Zillow's Misha Fisher says buyers might finally get more inventory, and sellers will see stable prices. Basically, a little more breathing room for everyone.
Breathing room sounds nice. Let's hope 2026 delivers. Thanks for listening, everyone.